Broadcast is now starting. All attendees are in listen-only mode.
All right, I'm unmuted. I was just talking for like 5 minutes muted. You should be able to see two charts right now. You see ES chart on the left, candlestick, basic 30-minute. You should see a ZB on the right, our Treasury Bond price profile. Type in a yeah, if you could see that. Good morning, sub. Appreciate that. Two black charts is all. Let me know if you could see those right now. Awesome. All right, very good. We should have started this thing probably at 7:15 this morning. Usually we do our webinars at 9:30, sometimes later in the day, but we thought we'd try something different. We're glad that you're able to be with us today. There's a lot of trading opportunities and a lot of exciting things happening today. And the questions are already piling in. I love it. All right, good. We have this morning. There's a couple of economic releases which I believe are important. I'm going to show you what those are right now. I'm going to go to Econo Day. Last night we had a lot of excitement with a huge rally in the equity market due to some potentially positive developments with trade wars that are going on. But by looking at the whole calendar today, it's the Thursday, August 29th, almost at the end of the month. We have GDP, which I think could be a big deal. I think it could really, depending on what comes out, frame the discussion going forward, this recession discussion, which is dominating the news lately. International trade in goods, and that's an okay one. Jobless claims as usual on Thursday, and then later on in the day, pending home sales. So the 730 number, though, on GDP, I think is going to trigger some price action in both the bond market and the equity market. So we'll take a look at both of those. And that's kind of why I'm starting a couple minutes early. And show one trade setup right off the top of the bat. And, you know, I'm just going to really show the mechanics of the trade setup, not really going to go into too much on the exact entries and exits, but we'll do our best. We'll do a little bit of science here. So let me close this up. We don't need to see a Econo Day right now. Let's take a look at the equity markets last night. Huge rally on the European Open, no question about it. We've basically started this whole shooting match at 82. We're up to 19. That's almost a 40 handle move. Remember, each point is worth $50 in the E-mini S&P. So that's a substantive dollar move per contract last night. On the bonds, same thing in reverse. We were at 66.11-ish, give or take, down to a little bit south of 65. That's about a 40 handle point move, which is about $1,300 per contract. So again, a big move last night. We kind of retraced a little bit here. I have a CCI up here, cross that happened right when the excitement happened, along with a exponential moving average cross. I got an 8 and 20 for the bonds, a little bit different than we have in the equity markets. And I'll go over some of the particulars. The trade setup, one of the things the Infinity AT Dome can do, which is very awesome, is actually do what's called a breakout trade, right? So you would enter on a stop. You enter on a stop either up or down. Is anybody seeing charts right now? Jerome's saying he's not seeing charts. Let's confirm that you guys could see the charts. Okay, everybody could see him, Jerome. I would try to refresh or maybe log in, log out, something like that. I don't know. Looks like everybody else is cool. And we got a lot of people here today. So the breakout bracket, what that does is it lets you enter the market on a stop. Remember, you could enter on a market order, you could enter on a limit order, or you could enter on a stop. Right now I have 0 position going on, right? I'm flat in the bonds, And I got 2 minutes here, so I'm going to go ahead and be quick, and then we'll go into detail what I'm doing. But if I wanted to enter in a stop, I would simply just place my cursor where I wanted, and I would say, you know what, if the market rallies up here, let's buy 2 on a stop at 165.18, and that would be long, right? I would be long at that point if we did hit that. Alternatively, I could do the same thing on the bottom side. I want to sell on a stop. Let's say it's 65.05. Then I would be short 2. So you might not want to be long or short unless there's a breakout, as an example. So we've automated that kind of, and what we've done is we've created these things called breakout brackets, where I've already set mine up, and I'll show you really quickly. My breakout bracket is going to have a 9 offset and a 6 offset, right? So I'm going to buy on a stop, 6 ticks up, or sell on a stop, 6 ticks down. Whichever one gets filled, the other one automatically gets canceled. It's called an OCO. Okay, OCO, order cancels order. Then I've added a second OCO on my position. Once I'm filled on a position, then I have a simple bracket going on at 12 and 10 around it. 12 and 10 around it. The bias is down this morning, obviously, since we're having that sell-off already. Bonds tend to know better than the equity markets. They tend to lead a little bit. Not always or not. So I'm going to go ahead and set my breakout bracket right before the 7:30 announcement comes out. And you do this by clicking in the middle of the ladder. You click on the middle of the ladder. You don't click on a bid or an offer side, but you would click here, and let's do a test. Click once, and these are my 2 legs of the order, right? And I want to time it a little bit closer to actually 7:30, which is any second now. Okay, so let's go ahead and flatten that. So wait a couple more seconds. What time is it, Marcus? 7:30 yet? How many seconds? We got a world clock coming up. So we're going to go ahead and put the trade in now. Offset is 6 up or 6 down. You got to be careful because the 7:30. All right, here we go. So there should be some numbers released. We'll see if we get any action whatsoever on this thing. Any surprises. If there's a surprise, we're going to have a substantive move one way or the other. If there's not a surprise, we're going to go sideways, and we're probably going to want to get out, just scratch or do whatever. Cross, you didn't mess up, but we have an opportunity here to start early, so we did. Thanks for coming. I'm going to explain in detail what just happened, which is 2% was GDP. GDP came out at 2%. I don't know if that's bullish or bearish, to be honest with you. And let me move this over here a little bit so we could just kind of keep our eyes on it. On the equity side of things, it looks like the move has been built in. Let's change this to a 10-minute. There we are. All right, so this didn't move the needle at all. So we didn't have a breakout trade. So nothing exciting happened to create velocity this morning. So that was that. And I'm going to go over the dynamics in great detail of what I'm talking about with a breakout OCO, with a regular simple bracket OCO, and all that stuff. And it's not unusual when you have a big move at night like we did and a lot of excitement to things kind of flatline. You know, cooler heads are going to prevail for a while. And in this case, it looks like cooler heads are going to wait for the open in the equity market. And, you know, God willing, we'll still be here at 8:30. So I'm going to go ahead and hit cancel all because there wasn't this big move at 7:30. There wasn't this big, terrible GDP announcement, which is causing dislocation. So we're going to hit cancel all. No trade was made, flattened just to make sure. And let's start the webinar. Good morning, everybody. My name is Jim Cagnina with Infinity Futures. As I said last couple of webinars, we are trading in exciting times. In exciting times because we have a lot of volatility, we have a lot of extreme pricing, and we have a lot of stuff going on in many different markets, not just the equity markets, but also in the interest rate markets and also in the crude oil markets. So these are, you know, our 3 primary markets that our customers trade. You could also trade currency futures, which are infinitely better than Forex futures, in my opinion. We'll cover that another time, or if you got questions on why that's true, let me know. You know, the metals complex, gold, is certainly popular. A lot of talk in the news about gold and stuff like that. But So that's where we're at now. The bond market typically does open a little bit higher and is a little bit of a leader than the equity markets. Usually, we do have a significant I don't know news from a news point of view focus on equity markets these days, and a lot of it has to do with elected officials and stuff like that. Let me just open up this chart a little bit bigger. This is just going to be let's go ahead and switch it to a weekly. We could see this better. This is the new Infinity ATCharts. The data goes back forever. It's not forever, but I don't know, 15 years. It's awesome. Web-based, and we'll go into a lot of detail on that today too. But here's the bond market, the 30-year bond market. Someone asked about the 50-year bond market. Well, we're not really going to go. There is no 50-year bond futures. There's a 30-year. This is the 30-year bond future, and then there's an ultra bond future. But the 30-year is the one we're going to look at today, alongside with the ES, the E-mini S&P market. So you can see here that we have, a pretty I'm going to say volatile picture, a pretty dynamic picture of a market, because we have definite peaks and valleys, peaks and valleys, peaks and valleys, peaks and valleys. So we have this long-term bull market that's kind of peppered with areas of Great Depression, which is good because it gives us an opportunity to go long or short. And that's what you could do in the futures market, right? You can go long or short. Yeah, Chris, the ticker symbol is ZB. Yeah, Ultra Bond UB. It used to be the original ticker symbol for bonds. It was US, right? US Z9. And what happened over the years when the electronic market, the Globex market took over, the symbol was changed to ZB, but it's universal either way. But our particular way of showing it is ZB, and I think that's the convention in the marketplace today. So you can see here there is a lot of price action. Now, the thing that you're going to see that's different in bonds than there is in the equities, in the E-mini S&P in particular, is that the bonds tend to move in a streak, and then they stay around a price. Then they move in a streak and they stay around the price. Whereas ES is kind of, like a bowl up, like you're popping popcorn, right? We're all over the place. So there's a little bit of more of a steady flow here, and when it moves, it moves. Remember, each tick. I'm going to go one lot here, and I'm just going to put a limit order in it. 13. 165.13. Oops, I had my simple bracket in there automatically. I had it auto checked, right? So what a simple bracket does is it gives me the profit target of your trade, right? The profit target of the trade is 65.01, the way I had it set up. And that's signified as a limit order. It's green, right? It's a limit order. And this, if the market goes down there and you get filled, then you're flat, right? You sold one at 13 and you bought one back at a lower price. You would have made 12 ticks times $31. That's a good thing. Alternatively, I have my stop up here. This is the other part of the trade, right? The third part of the trade is your stop loss. You want to put those stop losses in. It's at 165.23, and I'm losing 11 ticks if I'm up here. If we hit up there $331, that would be bad. And I'd be flat though, right? Because I bought one back at a worse price, at a higher price. I would have lost money. So that's a typical anatomy of a trade, and I automated that with what's called a simple bracket. I put my profit target here and my stop loss here. You could do it manually. You don't have to do it automatically. But as you can see now, the market is in the blue, right? The market is this blue. The last traded price is mark to market, right? So it's blue. My mark to market P&L is minus $62.50. That's the gross trade P&L, and now it's $31.25. So the dome is dynamic. It's awesome. You could do order entry from the chart as well, and I'm going to show you that. Actually, let me show you that right now. Today, this presentation, I had a PowerPoint and I deleted it. I'm not showing it. We're going to just I'm going to say what's on my mind and show you why I'm excited about these markets and why I'm excited about our new charts and why I'm excited about the time we live in. It's really a golden age of trading futures right now. And if you're doing anything else and you have the risk capital, consider what we're doing here. I'm going to go back to shoot. Let's go over here. Sorry about that. We'll keep our weekly view up. Let's go over to my 30-minute view, and let's add the little yin and yang button on the upper right-hand side, and it's going to show me a couple of different things. It's going to show me where my orders are. Okay, and the position area here, I'm just going to scroll a little bit down. I'm going to go to ZB. Did I pass it? ZB, and it'll show me I'm short one. That's my position. My open P&L is minus $62.50, and my open trade equity is 0. You can see here's my order to. Let's pull this over so you can see it side by side. This is my order to. That's my stop order up here, and here's my target. My target down here. Let's say that I want to change that. Let's say I want to change that. I want to move this. I want to move the stop down. I'm just going to click on the flag, right? And I'm going to drag it to, I don't know, drag it down to 20 and hit replace. I cancel and replace that order. And you can see it happen simultaneously back on the Dome as well on the web trader. And this is particularly, I use the word web trader, but the web-based charts. This is particularly useful if you're trading in the day, in the morning, or whatever you do. And then you have to leave your desktop, and you can come back and you're traveling somewhere, or you're commuting to work, or you're going to lunch. You could pull this up on your phone. You could pull this up on your iPad, whatever you got, and then you could actually manage your trade, see your position, and see what's going on and not freak out about it. That's the cool thing about this. And then if you have to, you could enter a trade, right? I can go ahead and, I don't know, let's do another limit order somewhere. I'm going to pull it down here to, I don't know, let's say 11. Maybe a little bit lower, and I'll hit the buy button, and it shows up on the trading ladder right here. And if my trading ladder was closed, it doesn't matter. It still goes. You don't have to have the trading ladder open. You don't have to be logged in. That's super cool. I want to go back to my trading ladder, and I want to right click on that order, and it disappears. It's gone, and we're all good. I just canceled my bracket order by doing that. That was a mistake on my part. If I want to just cancel that order, I right-click and it goes. I canceled my bracket order. If I want to resend the bracket order, I just take this little check mark off. Right? I already have a position, right? I take the check mark off and I just hit send bracket, and then it goes back. Check is automatic. If you forgot to check it and you want to send it later, uncheck that auto box and just hit send bracket, and it goes. And it shows here. It's all sweet. Okay, that's the kind of the logistics here. So the idea, though, on the original trade is, hey, I'm just going to flatten this all out. Let's get out. All right, we're out. The idea is, as I explained earlier, and I did it before the 7:30 start, so I'm going to re-explain it now because a lot of people have just joined. But I was excited about the potential of a GDP number doing something exciting, which it did not. And so let me just show you the idea of a breakout bracket with a simple bracket around it. It's kind of like an OCO on top of a OCO. So the breakout bracket, again, is you're going to enter on a stop. Oops, set a quantity, Jim. Set a quantity, Jim. Enter on a stop, either up or down. And the idea on the bracket is if the market goes up and you get filled and you decide to go long here at 65.19, remember, you might be range bound and you might not know what to do. This other order automatically cancels. This other entry order, this is a sell entry order, automatically cancels. So I'm gonna go ahead and automate this now. So the way I do it is I go over to my properties button, and I go over to 1, 2, 3, 4 tabs over to the right where it says breakout brackets, and I set how far away from the market I want this order to go. So I have my buy offset set at 6, my sell offset set at 6. These numbers might be different for you. You might decide that these are too far apart or too close together and change them and set them to whatever you want. If you're trading the E-mini NASDAQ as an example, you might want to have them a little further apart because, you know, it's a thinner market and it trades in smaller tick increments and it moves a lot, right? So you might want to have it a little bit different. This is based on trial and error, and this is one of the things why live accounts could trade in sim mode as well as live mode, and demo accounts, of course, could do the same thing. And you could practice. You can kind of do a real time practice strategy with the Infinity AT trading platform if you want to test any of these OCO orders that we have. So once this is set, order type is stop, right? I'm entering on a stop, buy offset 6, sell offset 6, hit OK. Now, the second, let's just do that first. I don't have the simple bracket checked. I don't have anything checked. So I have quantity 1 and a quick click checked, right? The only time I place a trade by clicking in the middle, the price, this is the prices, right? The ladder, it looks like a step ladder. It goes up by increments of 1 tick. The only time I want to place an order here is when I go ahead and click in the middle, and then it counts up 1, 2, 3, 4, 5, 6 for an order, and it counts down. Well, we just moved 1, 2, 3, 4, 5, 6. So that's my breakout bracket. Now, if one of these gets filled, we'll leave it in. We'll get filled on the downside, is my guess. If one of these gets filled, and as soon as I say that, of course, it's time to buy bonds. When I say we're going to get filled on the short side, everybody, it's going to be the opposite. The other one will automatically cancel, and I'll result in either a short position down here or a long position up here. Okay. Now, if I want to complement that, if I want to complicate that, you can. Now, let me cancel this. I'm going to cancel all, hit flatten. And I want to assign a simple bracket to that trade. I want to assign it, once I get filled, then I want a bracket automatically going around wherever my fill price is at profit target at 12 and a stop at 10. And this is user defined. You can make it whatever you want, whatever you like. Let's make it a lot smaller. Let's make it, I don't know, let's make it 5 and 5 just for fun. All right, I'm going to hit auto check there. Everything's automatic now. So I'm going to click in the middle. Boom. I got my breakout bracket. If I'm lucky enough to get filled, then this simple bracket is going to wrap itself around my position. Everybody with me? Am I killing you with boredom? All right, thank you. And by the way, type in any questions you have. This would be good for a fast market. Yeah, it is, but you got to be careful on your entry. You don't want to get whipsawed and get double filled. That's the trick. You don't want to get double filled. And it's also good just when you're trading in a narrow range. You know, maybe you have your Bollinger Bands up or something, and you're like, hey, we're in a narrow band here. We're going to break out one way or the other. I don't know which way, so I'm going to put this order in and see what happens. The one other trick here on the Positions tab button here, there's a second little button over here. You click on that, and it actually shows you your fills. This little button here shows you, your fills. Remember, I did a demonstration. I sold one at 65.13, and I bought one back at 65.13. Those are trades I've made. So if you made 20, 30 trades in a day, you're going to have them all up here, regardless of whatever market you're trading. Okay. And another real slick little trick on these charts, which makes these things so good. Let's say you wanted to look at a micro E-mini S&P right from here. You don't want to put a ticker symbol in, but you're just going to go here into your positions. Your contract list is what this is. It's a contract list, and you just click on here. It'll change the chart to whatever you click on. It's really convenient. It's so simple. I'm so happy about this. I can't even tell you. But we want to go back to bonds. So I'm just going to scroll back here. So we're focusing on this for today. Boom. Oops. No. Now I had a lot of calls this morning. Believe me, I had a lot of calls this morning before I started. We're here early at Infinity, and your customer service rep here, that's the other thing, is here early also. So if you didn't know that, you could call them or Skype them or send them a fax, whatever you want to do. You can get a hold of them. They're here earlier in the morning. Usually we start filtering in at 6. So now, oh wait, look at this. All right, so we're creeped up here to 65.22, and our order is at 65.23, and boom, it is. There we go. We got filled. And don't forget, stops act like market orders, so you're going to get the best available price. Now my simple bracket went around it, right? So I didn't do anything. I have a target 5 up, 1, 2, 3, 4, 5. It's 165.28, and I have my stop 5 down at 165.18. That's pretty basic automation. It's pretty slick, and it's inherent. It's one of the unique things. This technology that we're showing here, the Infinity AT trading platform, the dome itself, which is powered by Transact's RFCM. They're really a technology-based organization. I mean, these guys are responsible for the data feed being super quick, the transaction engine being super quick, and the trading ladder being super functional, as well as these new web-based charts. So they're geniuses over there. They're really, really great tech guys, and their job is to keep this thing flowing and moving. You're not going to see a lot of downtime, if any downtime, right? You're going to see a real stable facility that you have to access the markets. All right, so we're 2 ticks into this. We're up $62.50, and it's important to note an E-mini S&P tick is worth $12.50. This is, almost 3 times bigger. Right, so this is almost 3 times bigger, and people say, well, it hasn't moved very much. Well, this is akin to a 6 tick, or not a 6 tick, but a 5 tick move in the ES. We're only 2 ticks up here. So keep that in mind when you're trading bonds. You get more bang for your buck, and the transaction fees are less. The exchange fees are less. It's cheaper to actually trade these from a unit basis. These are great markets, and I grew up on these. I was in the bond pit. I don't know how many years ago, a long time ago. I would say 79 or 82. Me and my mom argue about this. We can't remember that far back, but it was early 80s at the earliest. Maybe before that, I was a clerk in the bond pit. That's where I grew up. And now we're kind of approaching our limit order. Remember, limit orders are different. Limit orders are different than market orders or stop orders. Stops behave like a market order. You get it as soon as that price is touched, boom, it's triggered. On a limit order, you actually have to do a little work here. You have to, it has to trade through your price, or it has to trade at your price until you're at the front of the line. See, right now I'm not at the front of the line yet. I didn't get a fill. Right there, I finally got a fill. So I ended up, the stop automatically canceled. So I didn't do a lot of work here. I set my trade up. I clicked in the middle price ladder. I let it go, and we ended up with a 5 tick winner. Now I'm in sim mode. I know it's not as exciting as being in live real mode, but I'm in sim mode. But our simulator is very, very good, in my opinion. Very, very good. On that note, Bob asked, why are transaction fees less on bonds? There's a lot of conspiracy theories on that. The exchange sets. The CME Group sets the exchange fees. It's not, we don't do it. I mean, we don't mark them up. We don't, we have nothing to do with it. They set those up. And I don't know if it's because the bonds have a long, deep history, or they're truly in, they're more of an institutional market, or at least they used to be more of an institutional market. I don't know why the CME Group has that pricing distinction, but it does. For whatever reason, and I get that a lot. What are your fees? Exchange fees are different across product lines, right? Energies, and metals, and FX, stock indices, interest rates, forex. Not really forex. I'd actually call it, currency futures. It's a way better word. They're different. So it depends on what you're doing. But in any event, I don't know why, Bob, but that's a good question. I've often asked myself that. Let's take a real quick break right now. I just want to remind everybody, trading futures, option on futures, and retail off exchange foreign currency, which is Forex, involves substantial risk of loss not suitable for all traders and investors. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. Just keep in mind, you have a high combination of leverage and volatility, especially if you're used to trading ETFs. If you're day trading ETFs, you're probably going to be bored to death. If you're trading regular stock indices, products with less leverage, less volatility, and less fun. Let's put it that way. That combination of leverage and volatility results in an equation for opportunity, but also an equation for risk. So be careful. Only fund your futures trading account in risk capital. You're not sure what that is, give me a call. Give your customer service rep a call. Everybody's definition is different. Mine is money I could lose doesn't change my lifestyle, lengthen my retirement horizon, or overly anger Mrs. Cagnina. Now, I always say that a little bit tongue-in-cheek, but not really, because stress in life really matters, and you make worse decisions when you're stressed out. At least I do. And probably most people do. I'm not a psychologist. I don't know. But in my experience, the more stressed out you are, the more mistakes you're going to make, and the more bad decisions you're going to make. So make sure you have that even keel. call your customer service rep, confidential phone call, or call me. I'd love to talk to you about my experience over these many years on trading these markets and what risk capital is and how to handle it and how to trade. You know, the number one thing is patience. When you're trading is patience. You know, this could be the best, most boring and greatest job of your life. I mean, or activity of your life. It could be because you wait. We're sitting here and waiting. You know, we had a 5-tick move in the bonds. And what time is it? It's, you know, we've been going at it for half an hour now, right? And someone would say, wow, only 5 ticks. That's no big deal. What's the big whoop? Well, the gross P&L in this trade is $156. Let's just say, you know, your round turn rate's $5 just to make it even, make it easy to math. It's $151 in 30 minutes. That's $300 an hour. I don't know if I'd complain about that if that was what I was doing. But we sat around and just listened to me talk. We didn't do anything else, right? Arthur, yeah, I'll do another bracketed order in a second. So, and again, I apologize for what seemingly is the randomness of this presentation, but I feel like I'm smarter when I'm just being random. So you might disagree. You guys might disagree out there, but that's that. So I'm going to remove this. Let's take a real look here at this market, though, and what's happening to it. And let's go back to a daily chart. Where's my daily chart? Oh, it's a weekly. Let's just make this a daily. And let's kind of squeeze it in a little bit. I'm going to readjust my axes here. Be patient with me. I drew a circle around that. Why did I do that? What was I thinking? Well, whenever I see, I call that a turnaround doji. Now, it doesn't always work, but when I see a turnaround doji in an uptrend or a downtrend, it's basically, and remember, a doji, definition of doji, where the opening price and the closing price are the same or nearly the same, right? They're the same or nearly the same, and they have relatively large wicks, and which is the case here. Actually, let me remove this stupid rectangle, circle, ellipse, whatever it is, so we can see it a little better. You know, relatively decent sized wick up here and a wick down here, and this is a candle. Those things signify a couple of different things. One, it could signify market happiness, right? We've found a fair price, and you can see yesterday's market profile, you know, price profile. It's a perfectly bell-shaped distribution. It's almost textbook. We have the midpoint here at 11. We have the point of control at 13. The initial balance here, the first 2 periods, and I started this in the European session at 2 a.m. Is almost perfectly symmetrical. This isn't rare, but it's not an average type of formation. It's very pretty. It's beautiful. This is the most beautiful pattern I've seen ever. at least recently. So this kind of confirms this doji. You know, there's price fairness here. The whole thing about price profile, or what you might know as market profile, or TPO, or whatever you want to call it, that whole thing, the whole idea is in this type of market, you know, what's a fair price for a commodity? What's a fair price for a futures contract? And the answer is, and so the market profile people will say, well, fair prices, you can see it on a market profile. And right now, the fairest price here was 66.13 yesterday, and that's kind of, we started where we kind of ended, right? And then we see that in the doji on the left-hand side. So when I would usually like to have this doji a little higher up on the chart before I get too excited about it, but I call this a turnaround doji. And you see it every once in a while where you have a daily doji like this. In the next couple of days, things turn around. Now, I don't know if we're going to do that today or not, because if I did know that, I would not be doing this presentation, I'd be on a beach with you guys at my private beach resort, and we'd be trading this with 100-degree certainty. but we don't know for sure. But that's just one of the small things that I look for when I see that, and you don't see it every day, right? We haven't seen it, all month. But here it's popped up. It's not as pronounced as I'd like to see it, but it's piqued my interest this morning when I saw it, sitting up there like that. Tomorrow, if this is still like this, and this market closes about the same or lower, then I'm going to be more excited about it. We really have to see what happens today. And when the equity market opens, we will see some activity for sure. I shouldn't say for sure, for almost for sure. Mike asks, what is the yellow vertical line on the profile? Okay, so this line here, that's a great question. And let me just show you how I have this thing set up. We have, I start this thing at 2 o'clock. I'm trying to approximate the opening of Europe, the European Open. And you have, people say, oh, when is Europe open? Well, I don't know. I mean, you have Germany in a different time zone than London. They're both formidable marketplaces. And, institutions are waking up and they're doing stuff. Now, I'm in bed at 2 o'clock. I'm in Chicago, CST, Chicago Standard Time, I call it. But I start mine at 10. You could start it at midnight. You could start it last night when the market opened at 5 o'clock Chicago time. Remember, this is a 23-hour market. It opened last night. I like to start it at 2 o'clock. Or you could start it, a lot of purists, a lot of profile purists will start it when the equity market actually opens at 8:30, but I didn't do that in this case. I started it at 2. It's up to you. You can do it whenever you want. So the time period, Mike, ends at the end of the day when this market closes at 4 p.m. Chicago time. Even though it opens up again an hour later, the close of the day is 4 o'clock Chicago time. All right, I have the brick height set at 1, and I have this collapsed. Hit done. So this, to go back to the original question, what is this yellow line? This just marks prices, what happened the first two 30-minute periods of when I have this set up. So from 2 to 3 Chicago time, this is when bricks were being formed. This is when transactions were happening. This is called the initial balance, okay? And it's a very good thing to know because especially on a day like yesterday where you had the symmetrical profile, the point of control acted like a magnet. Every time prices got up high, we went back toward the magnet. Every time prices went down low, we went back toward the magnet. And it's right smack in the middle almost, not exactly, but almost exactly, of the actual, just 2 ticks away of the exactly initial balance, the way I have it set. That's how I look at things. All right, so today though, it's a little different, right? We have a bias, downward, right? So far this morning, the bias here is down, right? It's negative. It's lower. It's down. So over the course of the day, this is going to fill out somehow, some way, and we'll see the picture change. But since have so much real estate down below, the bias is bearish. 2 days ago, the bias was bullish, right? Even though we had a point of control really close to the initial balance here, initial range, initial balance. I used the 2 words simultaneously. We ended up with a bullish day, which followed through the next day. So, my bias right now, of course, just by looking at this, not knowing anything else, is bearish. Is definitely bearish. And so, one trade idea, if you wanted to jump the shark. Oh man, one trade idea. Let's get where's my bond dome at? ZB. Why am I dyslexic today? ZB is selling and prices above value. That's the blue area. And then putting your stop, at the high. And trying to exploit the point of control, hopefully it draws it back down. So there's an example trade. And this is pre-market, so I'd be really careful with this. But as an example trade, we'd put a limit order in. We'd wait for the market to come to us, right? We don't want to do a market order right now. We'd say, I don't know, let's try to get in at 30, 65.30, and our stop would be, if we make new highs, we were wrong, 07. So I'd simply, select my quick click. I would go ahead and select my quantity. I would put my limit order in. Right there at 30, I'd have my stop up here, and I'd give myself a couple ticks above the actual high of the day, 5 maybe, or 6. And that would be my entry order based on the profile. This is, this would be a mildly conservative entry if all I was doing was trading the profile. The white box is called RD. The white box is called the midpoint. It's exactly the middle from the high to the low. Midpoint of the profile. Hari says, wait a sec, bonds open at 720 on your website. It says 720 bonds open. The historic open of the bond pit, and back in ancient times when the bond pit mattered. Now remember, when I was in the bond pit, there was 500 plus traders, brokers and scalpers. The scalpers were called locals back then. If you were a local, you were a guy just trading for yourself. It's kind of what we're doing, right? We're locals. If you were a broker, you were taking orders from, Merrill Lynch, Shearson Lehman, Drexel Burnham, Goldman Sachs. Half these firms aren't around anymore. And there were institutional orders coming into the pit. And there's 500 guys in there, at least. And there's some women back then, less women back then, but there were some. There was some unisex there. But that's the traditional start open of the market, Hari. But the reality of it all is it's a 23-hour electronic market, and people and institutions have been tuned into this, and they've exploited this before we've exploited this. So when it's time for action, even if it's before 720, the historic pit open, or even if it's after that, then there's going to be volume that enters this market. There are trade desks that are 23 hours a day, 24 hours a day. They're not sleeping. This is not a start-stop market. Yeah, you have a big lull at night, especially early in the evening, because everyone gets tired. People have to sleep. Europeans have to sleep. The U.S., the North Americans have to sleep. And then the Asian markets start to open. True, if you want to trade Japanese yen futures, a great time is 7 o'clock p.m. Chicago time. You'll see the Japanese yen moving because it's a two-way market. Half of the market's U.S. based, the other half is yen based. Oh, good point. All right, so Michelle I don't know what I would do without Michelle, because I make so many mistakes and she corrects them all the time. I appreciate it. So I have a stop here, right? But I also have my bracket checked. So when I get filled, this bracket's going to send, and it's going to mess up my original trade idea. So we're going to start over. I'm going to flatten everything. Number 06, I'm going to take auto off. We're going to go ahead and try, what did I say, a 30 and then a 6. Okay. It won't trigger my simple bracket now if I get filled. This is a common mistake. I make it all the time. I know better. But if this is auto is checked, the bracket goes. Auto not checked, the bracket doesn't go unless you manually send it. In this case, I manually put a stop up here. We don't need the bracket. Good catch. Thank you very much. Greatly appreciate it. Mitchell asks, what's the red line in the TPO? This is called the point of control, and it's simply the longest row. It's simply the longest row where price has traded the most over each 30-minute increment. And it's called the point of control. And you look at that, and again, it could act as a magnet. It could act as a magnet. Doesn't always. On trend days, you're going to have more of a linear type of profile, but on a regular day, it might not. All right, so here we are. Now, one of the other things, let's move over to a regular chart for a second. Here's the other thing that's going through my mind right now. Let's get rid of this. And let's get rid of this ellipse. Delete the ellipse. I have a CCI down here and I have a moving average cross. So this is like normal trading, right? You have an oscillator of some sort, you have a moving average of some sort. Everyone has different things they like to see. The other thing that, I don't know, people might do is some kind of band, a Keltner band or Bollinger band or stuff like that. I could never figure those out on a 10 or 30-minute chart. But on a bond chart, I'm looking at a 30-minute, not a 10-minute. And an equity, an ES chart, I'm looking at a 10-minute, not a 30-minute. And again, it has to do with that choppiness of the price action of the individual market. You'll get a feel for it once you start trading them and once you start interacting with them and studying the charts. You'll get a feel for that. So, here I'm going to put my predefined CCIMA indicator here. I'm going to add, what do you call it? I'm going to add, I do want to see the CCI also, though. So I'm going to add the CCI. Commodity channel index, and then I'm going to add super trends. Super trend. Super trend. All right, so here's what I'm looking at here. So, yes, we had this huge rally last night. By huge, what do we say, 40 or so handles. We're kind of oscillating sideways right now. The bonds did the opposite, right? So the bonds and the ES now are inversely related. As I talked, as last week's webinar showed, they're not 100% inversely related, and sometimes they're in sync. They're not inversely related, but lately they've been inversely related, and we're having this dynamic in the marketplace itself. The bigger picture, of course, is the tariffs, the trade wars. There's some other international tension going on, stuff going on with crude oil, Straits of Hormuz, and that kind of thing. And then domestically, we have interest rates, which I would argue is the biggest factor in all the markets today is interest rates. What's going on? Are we cutting again? There's this dynamic in the press with the president saying, "Yeah, we should cut," and the Fed is not saying anything. But they're going to act. I think September, second or third week in December. I don't remember. There'll be their next meeting. So interest rates are a big part of what happens here. The inverted yield curve. The prediction of this pending recessions, doom and gloom that may or may not happen. Those are the things that are affecting these markets right now. So bonds are historically very high level still at 165. They're not at the highest level they've been. I think the highest level is 176 or 177. Traded a huge premium, but there's still upside. So when someone says to me, "Oh, Jimmy, they can't go any higher," and they look at a day chart, say, "Oh, Jim, they can't get any higher." Look at that. You can't get any higher. Next person who calls me and says that, I'm hanging up the phone. They can get higher. As a matter of fact, this is a bull market. There's no question this is a bull market. I mean, look at that. We don't know when it's going to end. Maybe it ended yesterday with my Doji. Who knows? But until we have conclusive proofs otherwise, we're in a bull market. Now, that might not help you any given second of the day, but it gives you a basis for trade ideas. So that's why earlier I wasn't afraid to go long. Right now I'm not afraid to go long either, but we have this market profile demonstration trade up before the market. Now, as we get closer to 8:30, we're going to take this off and do something different. This is kind of, all right, what's going to happen now? But remember, at 8:30, when the New York desks kick in, I shouldn't say the desks, when the U.S. equity market turns on, you get a lot of activity. You get more volume, you get more participants, you get institutions executing investment strategies. You have hedgers executing hedging strategies. You have all sorts of stuff going on. So that's why you see these dynamic differences. So going back to my 30-minute view right now, we see the CCI has crossed over 100. Excuse me 1 second real fast here, guys. Sorry about that. I had to sneeze. I didn't want to sneeze in everybody's computer. And then we have the slower moving average, 8 period, looking like it's approaching the 20-minute moving average, the longer moving average. So that has my radar up for actually going long in the bonds. So, which is contrary to what we're doing over here on the market profile side of things, which we're going to, again, as we get closer, at 8:20, this trade's over. 8:15 maybe, this trade's over. And we'll just have to reposition everything until 8:30. Then after 8:30, we could move. So again, exponential moving cross, CCI, some similar oscillator down here that is meaningful to you. And let's get some kind of consensus here of what's going to happen. Yeah. Keep in mind that's that's a good question. The profit and loss levels. I look at bonds differently than ES because of the tick size. It's a different tick size, so the candles are going to look different than they are on a regular ES chart. All right, what other? Am I missing any questions here? Someone wanted me to do the bracket trade again. I'll do that in a second. PZ asks, how do you create 2 different profile charts? I don't know what you mean by that. I mean, right now I have 4 different charts up. I can create as many as I want. This is web-based, it's tab-based. You can keep making charts until you run out of computer processing power. Let's take a look at the ES, what it's doing. Again, the ES is kind of stuck in a sideways. Yeah, so just kind of be a little more specific, PZ, and I'll be able to try to figure out an answer. Now, also, we haven't talked about any news that's going on right now. So I'm not on Twitter right now. I don't have a TV on right now because I'm talking to you guys. So there's also the news factor in the rumor factor that's going on. Michelle says, I think, hang on, I got to open up. My question box just got really small. Why can't I open this up? Bear with me a second. I am GoToMeeting challenged right now at the second, even though I've been using this thing for, 100 years. Here we go. I think the question is, how do you get more than one profile on the same chart? Well, remember, each profile is a different day. So this is today, this is yesterday, that's the day before. Sorry about that. Bad allergies today. So if you wanted to do a different market, as an example, you'd have a different tab open up. If you wanted to have 2 markets in one area here, you can't do that. At least not yet. All right. So what time is it? We got 8:16. All right. So I'm going to cancel this trade because I'm going to cancel it because I'm going to cancel all, flatten all, whichever you want to do. Because right now everyone's going to position for the open at 8:30. The equity open at 8:30. All the markets are positioning for that right now. So you're going to have we should see some volatility. Not only, let me pull up an ES dome too. In both of these areas. And let's do this actually. Let's have some fun. Do we on the open on the ES right now we're trading at 29.16. Let's either go long or short, or we could do a breakout bracket if you'd like. So type in I hate to say type in BO, but type in break L or S. So we'll either go long, we'll go short, or we'll do a breakout bracket on the open. All right, we're getting some breaks. Arthur's putting a B there for short. You could do that. Oh no, I said buy. No, long. I said long. L is long. LS is short. Your opinions are, your long and short opinions are 50-50 right now coming in. Okay, so everybody wants to try a breakout bracket. We'll try a breakout bracket at 8:30. It's only 8:18. So by putting one in now would be suicidal. And I'll tell you why. Because people are jacking for position, right? People are jacking for position, and you're going to see some. You could have an 8-tick easily. We could have an 8-tick. Let's just go to well, it's a 10-minute view right now, so the high is 17, and the low is 13 3/4. Let's call it 14. So that's a 3-handle move on this 10-minute candle. We're going to have another 10-minute candle coming up. So when I set my properties, I would have to set this really far apart just to protect myself against these pre-open swings. And I don't want to do that. I mean, so it would look like this, and that's pretty wide. That's pretty wide, just to protect myself from the Remember, we want to trigger this thing exactly, between 8:29, 30 seconds, and 8:30. So this is not a good idea. Oops, I'm going to cancel all. Let's cancel all. Oh, one thing I forgot to tell you. This is also very important. When I have the breakout bracket in, I could change it. I could change the price levels by just clicking and clicking. This is the other beauty of this trading ladder. I mean, I could move them around and tighten them up or pull them back however I want. The instructions for the bracket are still good. They're still valid. They'll still work. Okay, you're not like, you don't have to come back to the property. You don't have to flatten all, cancel, properties, breakout. I'm going to change this to 12. You don't have to do this. You don't have to do this. You can manually, once you set them, once you put them on the dome, you could change them. Okay, that's another one of the hidden beauties of the trading ladder. Well, let me get this thing back on there. Let's see what's. I find it hard to believe we don't have a signal yet. Well, I guess we don't. All right. Oh, wait. Pull this up a little bit. And we're going to go ahead and actually flatten cancel. We'll wait till we get closer. And we're going to set this initially. Oops. Let's set this initially at 8. That should give us a good starting point. All right, and we already have bonds set. We'll do it in both markets, and we'll kind of hold them all, try to show them all together. You can see the price of the bonds now. It's 65.25. We had I don't know. I don't want to brag, but we're kind of back down into the value area. Remember, we were up here. We were trying to get the 30s, I think. We probably could have got the 28s. We're back down into this new value area. We're back down into this new value area. And that's kind of the magic of the price profile. Again, doesn't always work. I could be wrong. You could be wrong. You could be stopped out. But it's just another thing in your arsenal. And remember, we have that turnaround doji dangling up there. We have the turnaround doji dangling up there. Aubrey wants to know, another great question. What is the super trend settings? And this is the default, 7 and 3. I am going to try to figure out the math behind super trend and do a video on YouTube. I've already done them for, if you scroll down to the bottom, Williams R, weighted close, and I believe I did the vortex. They're on our YouTube channel. I'm going to work my way up this list and do them all. You know, and I'll show the equation and all that stuff. Let's get just an expanded view here. So the last good signal we had, great signal we had, and sometimes this doesn't work, sometimes it does. I'm going to always say that before I even mention how good things are. At the open yesterday, we had two converging signals. We had a CCIMA, we had the super trend, and you know, we've been off to the races ever since. Before that, we had two bad signals, but they weren't. They immediately reversed each other. So this would have been a loser, but that was at 3 o'clock in the morning. So hopefully you were sleeping and you didn't have that loser. Arthur asks, another pretty good question. Is there a list of all active contracts and their symbols? Well, the answer is yes, somewhere on our website. On my particular account here, I have pretty much all of them listed. Let me just kind of try to find it really fast. Infinity Futures, trading. Somewhere on here there is a list of contract specs. Let's go to the sitemap. And let's see if I could find the contract specs section. Newsletter, no webinars, CME research, about futures. Well, maybe it's in about futures, no? Somewhere around here, I'll find it and send it to you. But there is definitely a list. Hey, Marcus, do you know where our contract specs list is? Hang on, he's on the phone. Let's see, futures market. Well, here's some of the basic margin ones. So you can start here. So if you go to our margins page, it talks about risk, it talks about overnight margins, it talks about day trade margins, and it has some. This isn't everything. Why does that thing pop up? It doesn't have every single CME Group market, Eurex market, global market. It has the ones that we run into, our customers tend to request. And so you have the symbol and the day trade margin. So it's the margins page. I don't know if that helps, whoever asked that question. Oh, Hendrik is like, it's in about futures. Thank you. Hendrik, you can work here. You could have my job. There should be another more. Yeah, here we go. The very bottom of about futures, there's a contract specs link. I had to put this on the sitemap, by the way. Henrik, thank you very much. And then it'll have an excruciating detail, symbols, tick sizes, tick values, contract sizes, market open, close, contract months. So that's another great resource. Thank you for helping me. Don asks, what is the page on the Infinity website? Well, it's just margins.aspx, or if you go to trading, the trading tab, just click on futures trading margin. And remember, day trade margins, we offer flexibility, but they could be dangerous. So be careful, easy, slow your roll. You already get a lot of leverage with futures as it is. All right, we got 3 minutes here to formulate a plan. Let's take a look at where we're at here in the ES. because we're going to have to establish a bias. And right now the bias might be bullish, right? But let's look at the CCI. We're right over here. I'm going to add, just so we could see it real quickly, we're going to add the moving averages on here. Moving averages, we're going to go ahead and make this 20. Make that blue. Make this exponential. We're going to save it. We're going to go ahead and add the other one. So we're going to end up with the cross, right? Moving average cross, moving average. We're going to make this 6, yellow, exponential. Everybody's happy. Everybody's happy. So, you know, right now the bias is going to be probably bullish. And the bias on the bonds is probably going to be bearish. So we'll see what happens here. For the ZB, I'm going to set my profit target at 8, stop loss at 7. For the breakout trade, we'll do a 2-lot to start. ES, we're also going to do a 2-lot to start. And we're going to go ahead and set our profit target at 12 and our stop loss at 11. All right, and we're going to be dynamic. We'll move these things around when we have to for the actual trade itself. And just to kind of demonstrate again, we're clicking in the middle. We're clicking in the middle. Arthur, you say, yes, but what is the active contract? All right, well, for the Treasury bonds, we actually rolled over to December today. And the way you could see that, find that out, is look at my September contract. It's got 118,000. My December contract, which is the next contract, has 146,000. More volume in December. Time to trade December. Not only that, tomorrow is first notice day for bonds, and if you're carrying a long position, you could get assigned. That can go into assignment. In other words, you're on the hook for buying a Treasury bond. So this is off the board. September's off the board right now. We're doing December. You could do that same trick with the ES. And right now the ES is still September. All right, oops. All right, we missed it. I'm going to click and click real quick. We missed the open because I was talking about just running my mouth. But there's our breakout right now. We're waiting for a direction to be established. Oh, and I didn't hit auto. I didn't have simple bracket here, so I'm going to have to manually send this bracket if we get filled. I can't do it at this point because the trade's already there. That's okay. I'll be nimble with the mouse. So there's a little bit of happiness right now, or a little bit of uncertainty one way or the other. I mean, you're not really seeing anything in particular happening. Back down to the point of control here in the bond market. And usually this could take some time to establish a direction. This could take some time to establish a direction. I forgot to click the auto button, my bad. I'm going to go ahead and click it now because it looks like we're going to end up being long here at around, there we go. Send the bracket. Let's center things up a little bit, and there's my trade. Steven says 15 to 30 minutes. Yeah, you're right. I mean, and then we've seen complete reversals at 9 o'clock. So sometimes for the stock indices market, the breakout brackets aren't a great way to go sometimes. But yeah, Steven's exactly right. We'll let this thing percolate a little bit. Another trade idea. So if this was a one lot, next time we'll do a 2-lot, 1-lot. All right, so there we go. We got out. The bracket did what it was supposed to do. Everything's canceled. We're flat. We got lucky, or we're smart, one of the two. I haven't been accused of being smart, so probably lucky. Yeah, Mike, exactly. When the breakout fills, one direction cancels, and then I apply a simple bracket around that position. We're about to do it in bonds right here. So I'm going to close the ES dome for a second. Let's focus on, there we go, we're short in bonds right now, and the everything canceled like it was supposed to be, and this 8 and 7 profit target wrapped around. So we'll see. And the really interesting is, you know, you'll see the ES rallying right now, right on the left-hand side, 22, 23, 23 and a quarter. And the bonds are kind of sitting there. This is really typical. I mean, it's really typical because it looks like it's slow moving, but it just moved $64, $62. It looks like it's slow moving. It just moved $93. Again, the tick size is 3 times bigger. So keep that in mind. What's the volume? I mean, you can see the bid-ask spread is pretty tight, right, on Treasury bonds. And the bids and asks, let's pull up the S again so we could see comparison. I keep losing everything. I don't know what's made of me. Now, the bids and asks are in the 300s, 10 ticks deep on both sides in bonds. And the ES, they look like they're a little less. Today's rollover, right? So we're going from September to December, so we're going to see a little bit more activity in the bonds than usual. But these are tight markets. In other words, they're deep. The bid-ask spread is tight, pretty much as tight as it could be most of the day. Some of the other markets, let's take a look at, I don't know, let's add a mini NASDAQ market to this thing, where the bid-ask spread is a little more shaky. I don't know if shaky is a technical term or not, but I'm gonna trademark that, shaky, sketchy. So here we have, you know, the bids and offers are in the single digits or double digits, right? And so you're gonna have more slippage here, especially if you're doing anything more than a 1 or 2 lot, or 4 lot, or 5 lot. So don't freak out. It's a smaller tick size though, right? So that should give you some consolation. All right, so let's get rid of that. But thank you for the question. I mean, the volume in the bond it's good. The volume is good. You know, if we do $1 million in the ES, we're going to do 300, 400,000 in the bonds. Right now, we have 149 in the front month, 120 in the back month. In the ES, we have. I am probably dyslexic. I can't find your ES. We have 400, almost 500,000 already. You know, a lot of it was last night in the European session, but we have 500,000 already. We'll do well over $1 million today, is my prediction. I don't know if we'll get to 2 million, but we'll see what happens on that market. The beauty about doing what we just did, we got out at a reasonable. You know, I don't know if 12 ticks is reasonable or not, but we weren't too overly greedy, right? So now, you know, we're not stressing anymore. We're not stressing out anymore. Another trade idea, though, that I learned, which is an interesting one. Let's say we do want to go long again in the ES, and this is, I'm not going to put a bracket on this trade. I'm going to just go ahead and do an order entry, 2 lot, let's see if we can get filled, and then I'm going to manage the trade differently. Oh, geez, what did I just do? Oh, I lost my thing. All right, I didn't do anything. Wow, I am like definitely mouse challenged. Okay, so I got it, Marcus. So yeah, so now I'm long 2. I'm going way in the wrong direction. But one idea would be taking one off. Let's go 1, 2, 3, 4, 5, 6. Taking one off the table, and just for demonstration purposes, I'm putting my stop way far away. Just for demonstration, this is not a good trade, but just for demonstration purposes, the idea is if I can get one of the two, or a fraction of my position, it could be a 4, 5, 3, whatever, 10. If I get part of it, if I take profit on part of it, then I could move my stop to break even for the second part and see if I get a runner, right? See if I get a runner. That's a second kind of trade idea that is really good on trend days, because on a trend day, then you got a risk-free trade. Here we're going to get stopped out, unfortunately. It was a bad entry. Although I don't know, CCI is still pretty strong, 160. Candles all green. Let me pull this aside here. The 6 EMA is not converging yet, and this is part of the patience. This is a part of the patience and a part of the mental game that you got to play. As horrifying as it is, I mean, you're looking at your P&L. Hey, if this was a real live account, hey, we're up $300. I place the next trade. Now I'm giving it away. I'm giving it back. I'm down 100. This is bad. I don't like it. I'm getting out. I'm going to reverse. Those are all the demons that are going on in your head and in my head, especially in my head. That's got to be, you got to temper that. You're going to trade the trade and hopefully get better. And over time, don't worry about it. But you're disciplined now. We're not doing anything. We're not reversing. We're not flattening anything. We're not exiting or freaking out. We're sitting here. Bonds are kind of where we entered still. They're not indicating anything directionally right now from the open till now. But again, bonds are streaky. You'll see this thing start moving and it will keep moving. So right now, bonds are kind of content. The ES is back where we started. Don asks, is the December Ultra Note available? I believe the answer to that question is yes. I don't know if I have the Ultra Note on my, let me see if I have it on my trading ladder. I got to figure out what the symbol is. I think it's, what is the Ultra Note symbol? Let's see if this is it. No. Yeah, maybe. No. I don't have it on my setup here. Sorry about that. I'm sorry, UB. UB's bonds. Don's asking for TN. Oh, I was looking in the Z's. What's the matter with me? Let's go to TN here. Here we go. Is this what you're looking for? I mean, look at that. There is some, oh, and I'm in the wrong month even. Yeah, there's still a lot of volume there. That needs to be rolled over. I'll get that rolled over, Don. But that's got a lot of volume. I don't do Ultra Notes. It's just a matter of duration. Ultra Note is truly a 10-year instrument, whereas the regular 10-year notes, maturity could be a little less. We covered that in extraordinary detail last time. All right, so instead of making you just watch the dome go round and round, any questions, anything you want me to cover? Mike asks, when the breakout fills in one direction, does the other order cancel? Yeah, we already answered. I'm sorry, I'm scrolling wrong. Yeah, that's exactly what it does. Let me ask you this too. This is another thing that I'd like to know. Can you show how you got 3 days of profiles on one chart? Well, you get more than you get it every day. Make sure you got 30 minutes set, Michelle. And then on the price profile, I just have brick height at 1, and that's all you should be able to do. Just manipulate your axes until everything fits on the screen. But it'll post every day going back forever. If you have 30-minute on, are you not getting this? I don't know. I mean, I would try to remove the study refresh and then try to add it again? Because that doesn't sound right. That's not how it's designed. All right, so here we got stopped out. Remember, here's another, oh, I froze my stuff with this TN. Here's another crime-fighting tip of the day. I mean, we got stopped out, right? Remember, there's an order up here still. That's still, you know, if this was a live account, that's still at the exchange. That's still there. So you're going to have to either right-click to cancel all to cancel, or flatten to cancel. I'm getting my computer is slowly dying on us. Apologize for that. Let's get this back to how it was. So I'm gonna do that. Get rid of that. And while we're at it here, I'm gonna go ahead and cancel this bracket, and I want to show you what I meant by a 2-lot trade idea. I'm gonna go ahead and cancel all. I'm short 2. Now, if I wanted to take, I don't know if I'll get this during our time together. Let's say I'm fortunate enough to get a 3-tick winner. Then I would only be short 1. And what I could do is I could put my stop for that second unit back at break even, with the hopes of the market continuing down and having, basically I'd have a risk-free trade at that point. John said, oops, I got mixed up with CST and EST, just got in. I'm going to make it even worse for you, John. We started early. So anyway, we'll post this for you to get a handle on it. All right, so something is working wrong on here, so I'm going to go ahead and just close this, and I'm going to move this out of the way. I'm going to do this and this to complete my picture, so I have 2 markets up at the same time. John just asked if this is Patrick. First of all, there's 2 things you need to know. 1, I'm significantly taller than Patrick, number 1. Number 2, he's significantly smarter. So you got a taller, dumber version. This is Jim Cagney, and I'm just teasing you. I'm just teasing you. All right, so how are we doing? Any other questions? Any other things anybody wants to talk about? Oh yeah, I meant to ask you, what should be next week's topic? What do you want to talk about? What could I research? What could I do for next week? We could do more of these. And what time should we do them? Is 7:30 a buzzkill for everybody, or is 9:30 better? 7:30, at least the market moves and we could demonstrate stuff. Any preference? John's flexible. 7:30, we got a lot of 7:30s. Carl asks, how are you getting 2 charts on your screen at the same time? 11:20. All right, whoa. All right, so on the bonds here, we just got filled on 1 contract, right? And right here, our entry was 16 on 2. So if I were to put a buy stop at break even, actually, I'm going to move it to break even plus 1, so I get my commission back. This, in essence, you could consider this a risk-free trade, right? We've taken profit on half of it. We've taken profit on half of it, and now whatever happens, happens, right? So if we actually market keeps going down, I'm looking pretty. I could pick another place to get out of my last lot, and it doesn't have to be a 2-lot trade. It could be a 3-lot trade, 4-lot trade, 5-lot trade, multiple lot trade, and you could take some of them off the table, and you could leave some of them on. In this case, it was 1 and 1, and so now I'm going to wait, right? So I could do a couple things. I could trail my stop, or I could just be super patient and say, you know what, I'm going to, I'm going to wait for the market to get to whatever level I choose. And here's my profit target. Again, it's anatomy of a regular trade. I'm short one. I got to stop in for one, and I got to target in for one. So anyway, I'm glad we were able to see that. This is way too tight to be practical because I will get stopped out on this, but you guys get the idea. Going back to the question. All right, everyone's saying everyone's digging 730. Todd never sleeps. Let's see. Yeah, everyone is saying early morning. All right, so maybe we'll do next week 7:30. I'll pick a day where there's some kind of activity. Aubrey asks, could you demo AbleSys? Now, AbleSys is a signal program that works with our firm, with Infinity AT data feed and with our platform and everything. And AbleTrend, I think, is the name of the software. And it's some folks out of California that are, you know, I've known them for a long time, seem to be really good people. I could ask Jesse, Jesse Wang, and there's another guy, I can't remember his name, that do presentations. I could certainly ask them to do one for us. So I'm going to write that in my notebook. We won't do it next week, but AbleSys presentation. I'll do that. I'll ask them to do that. Whoever asks that question, I'm going to get that on the schedule somehow, some way. They'd be happy to do it. All right, so screen management. Let me move this bond thing out of the way here. Screen management, if you want to, this is tab driven. So you just need to pull your tabs out, right? And you have multiple screens. I'm using Chrome. Firefox is a good one. The Windows, the old Explorer isn't supported anymore by Microsoft, so that you're not going to use that. But whatever the newer Microsoft one is, the name escapes me right now. If you want to duplicate a tab, so here's a bond chart. I'm just going to right click on the tab itself, and I'm going to hit duplicate. It's going to duplicate the chart. So now I got two of them. I could pull it out or not pull it out. I could change this to crude oil if I want. And now I have duplicated my chart. I had bonds, I got crude oil. You know, you're just right clicking, duplicating, right clicking, duplicate, pull it out. There you have it. Stephen, thank you. Appreciate coming. All right, so 7:30 is in. All right, so going back to what topic? We can't, you know, screen management is pretty easy. I don't have to do a whole webinar on that. All right, well, I'll come up with stuff. We don't have a consensus on that, but if you want to email me some suggestions, my email is trade, T-R-A-D-E. I'm going to type it in here in a little window at infinityfutures.com. Hopefully I spelled that right. Zip me off an email. Okay, so Bob's saying currency or energy futures. Okay, that's good. We could look at crude oil. That's another good one. Brad, thanks for coming. Okay, so different markets. We could take a look at different markets. Trade ideas in different markets. That's another good. Which question didn't I answer, Hermit? I'm sorry, Hamat. I apologize for saying your name wrong. If I missed. So the bond exchange fees. He wants to know fees on bonds. Hang on, let me look at my cheat sheet here. Are $1.60 aside. Are $1.60 aside. Commissions are less than that. So as opposed to an E-mini where it's $2.36 aside. So what's that? That's 40, 50, 60, 76 cents, 86 cents, no, 40 plus 30, 76 cents cheaper. So $1.50, round turn less. Michael, VWAP asks, how have you found VWAP to be a useful indicator? You know, that's a great, yes and no. When I say yes and no is, I think it's great, but I don't know how to use it. properly, but Patrick does. So that's another thing I could add on the list. Say, hey, Patrick, do a video, or ask him politely if he would do a webinar or a video on VWAP and how to use it. I think it is useful. I'm just not the guy. You'll just get really a textbook analysis from me. But I'll add that to the list. All right. Thanks for spending time with me this morning. I know it's you guys got a lot of important things to do all day. I appreciate spending time. Remember, trading futures, options on futures involves substantial risk of loss, not suitable for all investors. Please try the new charts, and they're awesome. They're easy. They're so intuitive. They're the data is for web-based for any type is exceptional and getting better every minute, every day. The tech guys at Transact are all over this thing. They're dedicated, they're devoted, and they're very smart. This is a great product. So try it out if you haven't already. And you could just go to the the home page, click on Learn More, and you're going to get this thing. Fill it out. You'll be able to download. You'll get an immediate username and password. Download it. Hit the start button, and you'll have what I have, and you'll be able to bang away at it and see if it's for you. Michelle, thank you. Thank you for keeping me from minimizing my mistakes. Steve, Ken, appreciate it. Hamad, thanks. Charles, you guys have a great day. Remember, trading futures, options on futures involves substantial risk of loss, not suitable for all traders and investors. Be careful out there, and good luck.